Could this be the most important chart of 2025? As we all know, semiconductors began the bull market and now it's been lagging for over 6 months. What's going on and why should we as investors and traders be paying attention? More importantly than that though, what's in store for the end of the year? Today we take a look at seasonality for the US 500 and what generally happens over the first 2 weeks that might surprise you. With Bitcoin dominance falling off, altcoins have been absolutely going ballistic. And as we've mentioned, many of them have been going parabolic. Whether it's XRP or Tron over the last 24 hours, there's still plenty of opportunities for us in these coins. And in today's video, we'll take a look at whether the second best is about to break out and really begin the beginning of alt season. Today, there's a lot to discuss. So guys, stick around. Let's get into some amazing data right now together. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, there is a lot to discuss. We'll begin with the stock market, we'll go through crypto, and then of course, we'll look at the options and the key levels that we need to be watching for all of the major markets, including metals later on. But let's begin with SP 500 seasonality in December. For the last 70 plus years, we've tended to see a little bit of weakness at the start of December, followed by strength, followed by a little bit of a pullback into the middle of the month, and then a rally through, which is what is known as the Santa Claus rally. This is taken from Grant Hawkridge's chart over on X, so give him a follow if you're interested in that. But as we know, it's an election year. Things can be different. Almanac Trader here shows what we've been discussing recently, which is that the 2000, that is the small caps, may actually be the best. And we tend to see small caps outperformance starting around mid-December, usually running through to January and possibly even March of 2025. So will it be the same? We've seen some weakness in the small caps over the last 24 hours, which we'll look at later on today's chart. But this is a very important thing to understand in markets. And one of the reasons it's important is because everyone is turning ultra bullish, except for retail traders, as it turns out. It seems like many retailers are trying to short this market right now. And we wouldn't suggest that unless you're looking at a very short term, that is very quick in and out type of scalp. Why is this? Well, it looks like every single fund manager is upgrading across the board. JP Morgan now joining where we've been for a little while here at 6,300 by the end of the year, joining pretty much most of the main analysts. And the reason is they're playing the stats. Whether you're looking at short-term, medium-term, or long-term health, the market right now is pretty strong. And you can see here that financials, cyclical markets, equal weighted, advanced decline lines, all of these things have been making all-time highs over the last couple of weeks. And this is leading on to further strength. But as we mentioned at the start of today's video, it really comes back to, are we being led by the right companies? We know that this whole bull market started with the semiconductors, and for the last 6 months, they've been having a pullback in time, potentially getting a little bit too carried away with forward earnings. Well, if we follow a similar path to 2016, that would mark December as a period where semiconductors and other tech stocks should start to pick back up. And it makes a lot of sense when you look at the charts such as this one we posted over on our X account, links in the description down below, by the way. Time for a bit of rotation. Look at this log chart of semiconductors. Semiconductors have been absolutely blitzing for the last 2 years. Then around 6 months ago, they started to weaken. Now, since then, we've seen 3 touches to this trend line and recently a decent response off this level. If you go back 2 videos, we also talked about NVDA getting some secret dark pool activity. And this could be where the semiconductors starts off. If we get NVIDIA through a 141, which you'll learn later on in today's video, is a big call wall level, we might be seeing semiconductors playing catch up to the rest of the market. And why is this? Well, pretty much any read you look at right now, the next 3, 6, and possibly even 12 months tends to look bullish at the current data that we have. Now, as we know, 2025 is going to be a tough year for a lot of investors, and that's because it's probably going to be up, down, and all around. Whether it's trade wars potentially being a problem or something else, there will be pullbacks, and it is likely that we'll get a 10% pullback during the year. So make sure to stick around on the channel as we do see that happening. As we mentioned, most people are turning bearish when it comes to retail traders over the last week. That is not a good way to be when the market is so strong. And in fact, that spread was the lowest we saw in the last 7 months. And that helps us to climb the wall of worry this December. Effectively, retail traders seem to be mostly offside. I'm hoping it's not you. You can see here Tom Lee also coming in with a 6,300 by the end of the year. The biggest notes to mention, of course, jobs numbers, CPI, and the FOMC this month. All of these could be catalysts, but in general, most people are calling for 62 to 6,300. December rarely is not a bad month. Traditionally, it's been pretty good. We don't tend to see it being the worst month of the year. Only once has it been since 1928. So realistically, you can't expect December to be a shocking one overall. And remember, the Santa Claus rally trade tends to be very good for the Russell 2000. Now, why is all that important? Well, it comes back to understanding that currently we are in a dull market that's moving up. Will there be opportunities in different sectors? Absolutely. We've started to look at certain areas of the market that we believe will outperform in 2025. And in our private community in particular, we've segmented out a little bit of a sector that we're looking at. So if you're interested in finding out more about that, definitely come and join us. But let's talk about Bitcoin for a moment. Before we go back to stocks, we look at the call walls, we look at where we're at in terms of the key levels. Let's talk about Bitcoin because it's in a bull cycle right now. And we know that, of course, it's been the talk of the town. Now, when that crescendoed about 2 weeks ago with MSTR, we knew that we were probably at the point where we should be saying, okay, Bitcoin's going to take a little bit of a breather here. That's perfectly normal as part of the altcoin market. And we always know that phase one generally begins with Bitcoin. Then we tend to see large caps start to come through, which has certainly been happening over the last week, particularly XRP, ADA, Tron over the last 24 hours, even Chainlink. They've all gone very well, adding either 100%, 70%, 50% to their overall market capitalization. But Ethereum still hasn't broken out. And traditionally, Ethereum has kind of been the leader with the large caps before the alt season. So alt season, not quite here yet. Some are starting to push, but still some opportunities in those particular markets. Let's have a look at BTC dominance, which has continued to weaken over the last couple of sessions. Again, breaking that log trend line and showing us that it's likely that big money is moving through the coin market at this stage. So before we get into those charts later on, let's talk about the big dark pools. We know there was a large dark pool transaction, the second biggest in the last 2 years when it comes to IVV. That is effectively the SP 500. Could it be a bit of profit taking? Well, we would say that it's possible. As we know, seasonality would dictate that if we're looking at a December period of the year for stocks, we tend to see kind of like a bit of a pullback, a rally, a pullback to the same level, and then, of course, a rally up from there. This could be a little bit of harvesting before the end of the financial year for maybe profit taking, but still 2 large trades coming through as we get a little extended here on the S&P 500. We wouldn't be surprised to see something like a sideways market action, a slight pullback over the next 2 weeks, then continue on with the rally. Maybe semiconductors rotate a little bit while we're waiting for that. We are still in earnings season, so make sure to pay attention to these charts, but let's get into the S&P 500. The advanced decline line continues to be pretty strong. The overall market continues to be dull, but moving up. You can see here only adding 0.05% over the last 24 hours, which pretty much is in line with exactly what we've been discussing. Kind of slow down week after Thanksgiving, and we're still grinding kind of to all-time highs. With the options levels for today, here we are, and we're starting to get, a bit of a signal that maybe the market is starting to take a breather. The last time we saw these signals, we were close to kind of temporary peaks, and you'll notice that that's where we find ourselves right now. Now, does that mean you want to be terrified of the markets? Well, I don't think so. I think the data, the stats, everything looks pretty good if you're willing to hold for a period of time. But if you're looking at adding to this position right now, is this really the place to do so? Well, traditionally, based on seasonality and what else we know about markets, it's probably not. There's a decent chance we'll get a dip over the next 2 weeks that might give us 1 or 2%. Now let's have a look at the options and see whether that agrees with it. We know we're trading at 60-50. We also know that 60-50 is now the massive call wall. And whether we're looking right here at this level or we're looking all the way across to the next session, which is the 5th of December, you'll notice there are so many calls at this zone. If we're able to close above 60-50, 60-60, then of course we're looking at 6100 being the next target. And if we're able to close above 6100, 6200 will become the next target. This is based on checking out all of the options moving forward. And if we actually looked at every single option, which I'll just show you here, you'll notice that 6100 call wall is a huge zone to be watching. What about Tesla though? Is Tesla looking good? 360 remains the big resistance. And for this stock, if we're able to clear 360, where is the next level? Well, it's clearly 400. 400 being the most struck zone coming into this week's or this month's OPEX. So remember, the big options expirations are what counts. And in this case, everyone's going to be gravitating towards 400 should we be able to break through. Another one of those is going to be NVDA. You'll notice here 140, 141, an important level this week and next week. And then, of course, 150 becoming the overwhelming level past that. Can we get through this area? So far, we've talked about being trapped on the 135 and finding buyers. And of course, we've been trapped by the 140 to 141 on the call end. If we break through, considering the large transactions we saw just a few days ago, and again, just go back to 2 videos ago and you'll see the dark pool activity, this could mark a big change for semiconductors. And people have been asking about this. I've seen in the comment section, oh, what's going on with semiconductors? People are getting exhausted by the fact that it's done not much for 6 months. It's interesting how when that tends to crescendo, all of a sudden the charts start to improve. US 10-year will move this week on non-farm payrolls, guys. As we know, it's pulled back, which we suspected it would. That's led into treasuries, which you can see here doing a little bit better, but still kind of hovering around. Remember, treasuries are usually a multi-month to yearly hold. In this case, everyone's been talking about how they're short treasuries, yet treasuries have been actually rejecting that idea over the last couple of weeks. Remember, if it's in the press, it's in the price, and whatever these big guys tell you to do, generally the market will actually go the opposite of that. In terms of the consumer discretionary side, as we mentioned in the last video, Black Friday was an absolute bumper. Whether people are spending it on debt or they're doing it some other way, it looks like people are spending. And of course, this is leading on to many consumer discretionary stocks doing quite nicely in the markets. High yield junk bonds, I thought we'd switch it up today and get rid of the home builders for a second. They're still pretty good. Junk bonds overall showing bullishness across the board. And while I've dropped over the last 2 sessions, I wouldn't think too much of this just yet. Generally speaking, it looks like the bonds market is prepared to take risk right now. The US dollar finding base still on the daily 20 moving average and our anchored VWAP here. Again, if that level is taken and we close below here, that's a good signal that things like China are on the improve, metals are going to be improving, and everything else. But I wouldn't write off the dollar just yet. It's to be determined which way this is moving at the moment. The US dollar is still strong, and we're looking at how it reacts to 107 should it get back up there. That'd be probably where shorters would try to come back in on it. What about gold? Still holding that first bull zone. It's done okay. It's kind of just consolidating around. But silver was the standout of the last 24 hours. Coming off that level we've been discussing, breaking above the 3080, 3090 zone, which is nice, and now looking towards that 3150, which will get a lot of swing traders back on. So far, so good for silver. Actually looking like it's playing catch up. One of the best looking candles we've seen in a little while. So can we manage to get through this daily 20 and hold it? Because we're not really through that. I wouldn't call that a super strong break of it. You'll notice here, 1, 2, 3, resistance. We break through, we clear 131.50. That's going to be a great sign for silver to start playing catch up. Silver's still underperforming gold for the year when you think about generally how much it should be up by now. So a very interesting metal at a very interesting price. Let's move over to US oil. It was up around 2% over the session, but generally still very much chop city. Yes, we know buyers are sitting between 67, 68. We know sellers are sitting around 71. So it's in the middle of nowhere land. We'll update when that changes. What about Tesla? 360, 360, 360. Not bearish on this, guys. 325 and 330 is kind of the base for now. And at the moment, of course, as long as Elon and Trump are all good, we have to think that this is going more bullish until proven otherwise. What about semiconductors? Now, this chart looks a lot better. You can see here that semiconductors tested that trend line, found a few buyers, and it really is time for it to pick up. You've got to think about it this way. If you bought semiconductors at the peak in March of 2024, you're barely up on that position. Now, that's unheard of when you think about the news that was pushing through semiconductors for the last 2 years, but it's just the truth. The charts needed to take a slowdown. They've done so far. But remember, it's not just semiconductors, it's semi versus SPY. If you take a look at this chart, most of you are going to know, in fact, pause the video. What type of pattern is that, everybody? I'm sure most of you would have answered it correctly as a head and shoulders. And you'll notice that we are right at that neckline. It's time for semiconductors to perform. If it doesn't, well, it's probably one of the ugliest charts I've seen in a while. It's not exactly the best, is it? So it's time for semiconductors to come through if they're going to. You can see here NVDA finally putting pressure on that 141. The huge dark pool activity that we saw coming through on a 2 times levered fund right there. So far, so good in terms of reaction. I'd like to see it clear 141, then move its way to 150. And 150 we know is like the worst level. It's like the kryptonite for NVIDIA. But if it manages to get through 150, then of course over the subsequent months, we'd be looking for around 175, 180. Remember the latest earnings, we didn't see downgrades on NVIDIA. We continued to see the street get happy with themselves, whether that's correct or not. HSI, big day for it. Nice move. Been looking for this for a while. Position-based traders would be very happy with Chinese markets moving up here. And you can see that we're putting pressure on this upside and kind of marking that even if we get pullbacks now, there are some buyers in the Chinese market. Now, we've been alerting to this for a few sessions now. And one of the reasons was because, of course, when we looked at iron ore, we started to see iron ore improving across the board. Over the last 24 hours, we also saw copper break to a new high. And these are all good signs. If we see weakness in the dollar at the same time, it could mark a significant shift for the Chinese stocks. So HSI, the best it's looked in like a month and a half, 2 months. So really, really nice over the last 24 hours. US 2K dropped, then found a rally. Nothing to be concerned about here. We're just testing this all-time high, obviously trying to get some momentum, reset some indicators. It was the best performing market over the month of November, obviously rising up about 10%. And now it's having a bit of a rest, resetting those indicators. It's perfectly normal at the highs. Even if we pull back further, I'm still thinking that the Russell should have performance in it. So we're looking for that to break to a new high. Speaking of all-time highs, we've got an all-time high on the NASDAQ, and you can see again, signs of exhaustion coming through. Similar times we got exhaustion like this, while markets did have a little bit of a kind of sideways action. Now, a lot of you didn't believe it on Bitcoin recently, but we found that Bitcoin came back as well. Went higher first, but then came back to the exact same zone. So what this is telling you is it doesn't mean, oh, sell the NASDAQ. Oh, goodness me, got to get out of it. Run. No, we don't need to run. What we need to do is we need to just be realistic and say, well, maybe that seasonality will play out. Overall, we'd still want to be bullish, but there's probably not much reason to really get aggressive on something like the NASDAQ right now, considering. We'll bring that up in a moment. Let's have a look at ETH versus BTC. Now, you'll notice here that Ethereum's been improving ever since we started talking about it. Ethereum's been beating Bitcoin, which has been pretty nice. And if we have a look here at ETH dominance, so we put, I think it's FD, we can see here that market cap dominance of Ethereum is pretty low, 12.84%, not the lowest it's ever been, but traditionally we've been able to get Ethereum upwards of around 20% of the market. Now, you might say, well, that's going to happen again. I think 18 to 20 is a fair target during 2025 for Ethereum, and it's probably around where you would expect it to start to bounce back up. Even with all the new coins coming through, this is still a fair level. Remember, it does have exchange-traded funds. It will be bought by fund managers looking at maybe some value compared to what they see Bitcoin at. So this is a pretty important level for Ethereum dominance. And as we saw, Bitcoin dominance is dropping. Now, speaking of Ethereum, this trend line matters. We are watching this like a hawk, okay? We've got hawk vision on Ethereum because if it does break out, that marks a big change for the crypto markets. And while we saw XRP, by the way, hitting our targets, we don't even need to put that in, but you'll see when you look it up, it hit our kind of level and therefore now seeing a bit of a sell-off. Probably will go up later on. Notice how much Tron went up over the last 24 hours. People are moving into these older coins that were like the 17 coins. Anything that was around during 17 seems to be getting a bit of love, and the new alts don't seem to be getting quite the action. So, for example, Polkadot or Nia or any of these other coins that were more of the newer coins, they're not getting the love like something like a Tron or an XRP or an ADA or any of these 17 coins. Kind of like if you've got brand presence, that seems to be what's going. But have a look at that, an all-time high for Tron. Actually been in a very strong trend since the bear market. So strength has just continued into further strength. But that is not a candle I'd be getting involved in. If you were already in it though, congratulations. Very well done. Now let's move over to Bitcoin, sideways city. No surprise. We got the rate of change the other day. It predicted that we were probably going into this sideways city for Bitcoin for now. And remember, these are the previous reads across the board. So if you're being kind of falling into the trap of thinking, oh, Bitcoin, I've got to get into it. Yeah, Bitcoin's the best coin. Don't get me wrong. I love me some Bitcoin. I still think it'll go 120, 130K. But you've got to understand there are times to hold it and times to say, well, I think it's going to underperform for a while. That doesn't mean that you need to get rid of it or anything, but you need to understand what it is. And again, this was kind of predicted the other sessions just by a little bit of exhaustion. So Bitcoin, just doing some sideways action, maybe even having a little bit of sell off. It's just chilling for now. So don't worry too much about that. But Ethereum's trend line will be the one we need to watch. For the week ahead, we still have some more news, guys. Really, all that matters is Fed Chair Powell speaking on Wednesday at 1:45 p.m. New York time. And then, of course, we've got non-farm payrolls on Friday. Some really important stuff coming up, and that one's probably arguably now the most important figure coming out of the US. And although it's always wrong, so I'm looking forward to covering it with you because I'm pretty sure it's going to have a million revisions under the sun for the amount of jobs that are out there. This one still will move market. So if you're a currency trader in particular, you'll be wanting to pay attention to that. Guys, in summary, the markets are still looking relatively good. If seasonality played out, we might go up round and then down during the first half of the month. Then traditionally, we would go up after that point. Most banks think we're going to 6,300. We don't really listen to those, but it makes sense to the statistics we brought up a few weeks ago, 62 to 63 by the end of the year. And realistically, we have to remain positive with the current reads we have on the markets. If things change, though, we'll be updating you guys. And of course, bring it to the daily show. Make sure to subscribe. Make sure to follow us over on X. And then, of course, check us out with the Black Friday sale. I've extended it for a few sessions just because there's been a bit of demand. It's been great to see so many of you moving into the private community as well. And yeah, there's a little bit of difference in there. So if you're enjoying this stuff, come and check it out. We'd love to have you. Bye for now. See you guys.